All right, hi guys. I hope all of you are doing well. Welcome back to Your Nifty Guy. In today's video, I'll be taking you through my detailed analysis for tomorrow's Nifty setup. We'll look at the current price action, key support and resistance zones, and the levels that could play an important role in the next trading session. I'll also share how I am planning to position myself and what I'll be avoiding. So make sure you watch till the very end to get the full outlook. If you enjoy these daily updates, don't forget to like the video, subscribe to the channel if you haven't already. Share it with your trading friends or communities that you might be a part of, as well as put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to everything. It really helps and encourages me to bring more such content every day. Excuse me, got a little bad throat. Uh, let's just jump straight to the charts. And as usual, today's video will again be divided into two parts. First, we'll be discussing about what happened in the markets today versus what we had planned. And then in the second part, we'll be planning the trade setup for tomorrow. Our plan was to create a short entry below this zone, and market actually opened below it immediately, gave us a good selling, gave us a good pullback. Now, this was the entry as per the setup, and it got triggered as well. It was a good enough setup, and it was a very good thing that we got a small stop loss because of this very small pullback that we got just before the market broke the day's low. So this was the first trade that I took, wherein I entered into a short position at the break of the day's low with my SL just above this. Uh, it got triggered, right? The first trade of the day was a stop loss trade, which got triggered as soon as this particular high was taken out. Now, one thing which I really like and appreciate about myself is I make sure that before entering into a trade, right, before I swiped the cursor right on the mobile app for triggering the order, before I did that, I knew that this is going to be my stop loss. And then once that thing triggers, I will be the quickest to exit the order as well, right? And that is what I always advise to everybody, right? Before you enter a trade, you should know your stop loss, which should be a logical one. And once the market goes against your setup, against what you have planned, and it reaches your stop loss level, do not wait in hope that my markets might once again reverse and go back in your favor. Just take that stop loss at that particular point of time in case if it does reverse and go back in your favor, there's always the chance and possibility of taking a re-entry. Right. So this was the first trade that I took, in which I got my stop loss triggered. Post that I could see this particular trend line. Now I deleted this just before recording the video. Right. This is where my stop loss got triggered, and after the stop loss, after I had taken the stop loss, this is when I had drawn this particular trend line, and this was a breakout with a good pullback as well as a retest of this particular trend line, along with a RSI divergence, right? So around the low which was created after my entry, if you look at the corresponding lows on RSI, the RSI created a higher low. That is where, and around here, if you see, look at the market structure, around here we are in lower high, lower low structure. But around here, after this swing was taken out, a higher high was created. With this pullback, a higher low was also created, a higher high followed by a higher low. And that is when I took a fresh entry on the long side at the break of this swing high. This is sometimes also known as a uh, stop loss and reverse strategy, where in case if you are caught on the wrong side of the move and you anticipate a move on the other side, you can take a contra trade to your first trade, right? Not a contra trade, but a trade which is opposite to your first trade. So the first trade was a short trade in which I sacrificed my stop loss, and then immediately when I could sense this particular move which might have been coming, I actually took the entry around here with my stop loss just below this. I got out at this particular candle, right? As per the trailing systems that I am used to, there was a good amount of selling which had come in from here, and we were again around those levels, and we could see some rejection. This was a inverted hammer candle followed by a good bearish candle. So this is where I got out. Uh, but these are the only two trades that I took today. And let's just say I just covered enough in the second trade to break even the stop loss that I took in the first trade. I might be lucky if I cover the profit and loss post the brokerage, but then that's it. That is how some days are, and that is how you need to position yourself, and you need to prepare yourself, right? Not every day is going to be the same. On some days, you are going to be break even. Some days you're going to make profit. Some days you're just going to go home with a stop loss, right? So we need to trade uh, emotionless. We don't need to be too attached to the figures on the profit or the loss figure that we see on the screen. After I exited again, the market did go back in the favor and could have been a very good trade. But nonetheless, I follow some rules, and that is the reason why I am a scalper at heart, and that is what I do. So I enter very quickly and I exit also very quickly. Just to give you an example, I exited here and in the next 15 minutes I was in another trade, right? So the stop loss that I had taken was not a deterrent for me from taking a second trade, right? All you need to do is be prepared mentally with your stop losses and then proceed ahead. And once you take a trade, you see a probable setup which is forming, you either take a stop loss, you take a target, or you to trail your position as per whatever system that you might be using, right? So yeah, I hope today's trade plan was clear. Post this again, the selling did come in, but then again, there was no particular setup which formed as per the uh, setups that I use. Nothing was looking too feasible for me, and that was the reason I did not participate in any further trades. Now, coming for tomorrow, we don't need this level. We don't need this. I'll also be deleting this for the sake of avoiding any confusion. We'll start with the daily time frame. Now try to understand for the last 3, 4 days. I'll just take 3 days. The candles are very, very similar, right? It looks like a doji with a little bit wider again. Doji is something wherein the opening and closing are very, very close to each other or at the same levels. Yeah, they're not very, very same, but then again, they're not either biased towards the high side or on the top side or on the bottom side, right? It's right at the center, just looking like a candy wrapped in a wrapper with wicks on both the sides. Today is exactly the almost the same candle, right? Now the psychology around this is the selling is coming in. Markets have moved from the high of 25,450 till around 25,050. So that is what the closing is, around 400 points. We have moved down. But then have we moved down with conviction? No. This is not the kind of selling that we are used to seeing. And this is not what the selling usually is, right? There's a saying in the stock market that market goes up with using a like a ladder and then comes down like an elevator, right? So this is not the kind of selling that we're used to. And plus, again, this is the reason why we are seeing such amount of volatility in the markets. At one point of time today, we were very close to giving a breakout of the day's high, but then again we came down and we closed near the lows, right? Similar was this thing around here yesterday. We broke out above the day's high, and then again we came back and closed a little bit towards the center of the candle, right? So that is what intraday volatility is, and that is the reason why I'm asking you guys to keep your position sizing very, very controlled right now, right? Market will confuse you. Market will try to confuse you on a 15 minutes time frame or on a 5 minutes time frame, which is usually the most favored time frames of intraday traders. I use the 5 minutes time frame a lot, and again around here as well. Uh, while I was preparing for this particular video, I could again see there was a divergence on the 15 minutes time frame as well, right? And the breakout of a double bottom with a divergence did come out, but then again it failed immediately, right? So this is something the time frames that most retailers usually use is the 15 or the 5 minutes time frame, and there's a lot of confusion in around here, right? And that is what I always say: when in doubt, either stay out or you zoom out. And one of my most favorite time frames to zoom out or on a higher time frame is the 75 minutes time frame, which I have specified and spoken about. a lot of times earlier as well. Now, why do I pay a lot of attention to the 75 minutes time frame is this is the only time frame wherein the there are even number of candles inside the not by even number of candles, as in there is one, two, three, four, five, right? So five candles divided by 75 minutes. These are all 75 minutes candle, right? So if we look at a 1 hour candle on the higher time frame, 1 hour candle or a 4 hour candle, the last candles they have not completed the entire time, right? Which is supposed to complete the 1 hour or the 4 hour. But then this is the only candle which time frame wherein all the candles are exact 75 minutes, right? And that is why I pay a lot of attention to using these candles, this time frame, not the candles. But I got used to or I got used to observing this particular time frame when I used to do option selling. Again, right now also a lot of my option selling strategy, which I am starting to experiment out. Again, it's been around 1.5 months or probably 2 months when I've been experimenting with it. And this is a time frame which I pay a lot of attention to, right? And again, if you see around here, we were in a clear lower high, upper high, higher high, higher low structure, wherein this is where we also observed that the structure changed very, very clearly, right? Right now we are in a high, lower low structure, which is a sell on rise market, right? So that is the reason you see every up move which is coming in is been aggressively sold into. For tomorrow, we'll keep the plan of action again extremely, extremely simple. We'll mark the day's low. Below this, we are short. We are very close to the bottom of this particular uh, support zone as well. Now, this was the weekly time frame. This was the resistance of this entire up move, which once broken out turned into a support zone. That is why we have it marked around here. But then again, there is a lot of support zones that we might find because the market has moved one way from here till here. Even if we consider this particular swing as the last swing, I am sure there will be an important support level around here as well, right? So this is again the 0.5 to 0.618 of this entire on the daily time frame is right here. I'll not be drawing that for now. But then again, yes, I'll keep the plan of action extremely, extremely simple. This was the last leg of selling, this was the zone, last swing, major swing, which was created. I'll look for a long entry only if we are sustaining above this, right? We break out, we get a pullback, we move up, we'll be creating a long entry only then. In this zone, I will be avoiding the trading, right? This will be a simple no trading zone for me. In case if market opens flat, breaks down below this, gives a pullback, breaks down below the pullback, that will be the best setup for tomorrow. In case if we open somewhere around with a little bit of a gap up, markets will again turn volatile, and I will suggest to avoid trading in that scenario. And any long trade should be taken only strictly above this particular high, right? So mostly tomorrow, I don't think we'll be getting a lot of trading, but then again, if the market has again decided to fall down or go back to lower levels, we might see this price action. So again, we'll not be predicting anything. We are simply prepared for all the scenarios, and this is what will be going with the flow once the market opens tomorrow. So yeah, that's it for today's analysis. I hope this breakdown helps you plan better for tomorrow's market. Remember, trading is all about preparation and discipline. So review these levels carefully before making any decision. If you found this video helpful, don't forget to hit the like button, subscribe to the channel, and share it with fellow traders. I'll be back again tomorrow with another update. Until then, trade safe and stay consistent. Cheers.